Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that could be presenting a really good buying opportunity right now. They recently announced earnings and they do have a really interesting catalyst coming up, and that stock is Kroger. And we can see that over the last year, the stock is down around 1% in the same time period that the S&P 500 is down around 9%. So they are outperforming the market at the moment. And so we're going to see in this video, based on some of the recent news that's come out about Kroger, as well as some of the up and coming catalysts for this stock, to see whether or not this presents a good buying opportunity from a value investing perspective. And so basically in this article right here, they talk about the up and coming merger and acquisition between Kroger and Albertsons. Basically, the court okayed a $4 billion dividend for Albertsons stock to pay to their shareholders ahead of the Kroger deal. And as we can see right down here, a part of the $25 billion merger and acquisition between Albertsons and Kroger, Albertsons actually promised to pay out a dividend of around $4 billion to their shareholders, coming out to be around $6.85 per share for their dividend payment to shareholders of record on October 24th, 2022, as we can see right here. So it's a special dividend. But there are a lot of people that are against this merger and acquisition between Kroger and Albertsons, mainly because it's going to be absolutely massive. Kroger and Albertsons are some of the largest grocery food chains in the country. And so if they were to combine, they would have 5,000 stores and annual revenues of over $220 billion. And that would basically push Costco into third place, as we can see right here. And considering the fact that right now there's a lot of price inflation happening in markets, if Albertsons and Kroger combine, then that's obviously going to decrease competition. And so prices might increase even more as a result of the fact that Kroger doesn't have to compete with Albertsons anymore. They just own all of the stores, and so prices might go up for customers. But of course, for shareholders, that means a lot more in the way of profit. So it could be interesting to see where this merger and acquisition goes from here. I'm definitely keeping my eye on this stock because I was one of the shareholders of record on October 24th, 2022 for Albertsons stock. And I'm still holding on to it, so we'll see where it goes from here. And so right here we can see this is Kroger's income statement for the third quarter of 2022 compared to 2021. Sales during that time period are up from $31.8 billion to $34.1 billion. And we can also see net earnings are down from $483 million to $398 million. So definitely not a good sign to see that sales are up but earnings are down, because it means that their operating expenses and cost of goods sold potentially have increased during that time period. So we'll see what the future holds for Kroger in that regard. On page 4 right here, we can see their balance sheet comparing January 2022 to November 2022. Total assets are up from $49 billion to $49.9 billion, so almost around a 25% increase there. And then we can also see majority of their business on their balance sheet here financed by liabilities compared to equity. They have $40 billion in liabilities and about $10 billion equity. And during that time period, accumulated earnings are up, and additional paid-in capital is up a little bit too. So they are unfortunately raising money by issuing new shares through additional paid-in capital, but their business is growing as a result of positive earnings on their income statement, which is equating to more in the way of retained or accumulated earnings right here. And so lastly, we can see this is their cash flow statement for the 3 quarters ended November 2021 compared to November 2022. Cash from operating activities is down from $4.7 billion to $3.3 billion. And we can see that they paid out around $494 million worth of dividends in the first 3 quarters of 2022, which is up from 2021. So they are prioritizing returning value back to shareholders at the moment, which is definitely a good sign. And so right here, we can see this discounted cash flow model to figure out the intrinsic value per share for Kroger. Yahoo Finance, as of today, is estimating that Kroger is going to grow at around 11% per year compounded annually. So I cut that in half for the next 5 years after that. They had around $4 billion in free cash flow in 2021, a net debt position of $19 billion, and then shares outstanding of 715 million shares. And so that puts their intrinsic value per share at $69 per share with a 50% margin of safety of $34 per share, which means that Kroger is currently trading at close to a 30% margin of safety here relative to their intrinsic value. So they are trading below intrinsic value right now. And that, coupled with the fact that they've been beating the market over the 5-year chart, and they have this interesting up-and-coming catalyst coming up with Albertsons, definitely, in my opinion, makes this an interesting stock to keep my eye on right now. And so right here, lastly, to end off the video, I did a competitor analysis comparing them to Costco and Albertsons, two of their main competitors. We can see across the board in terms of profit margin, looks like Albertsons is doing pretty well. They have the highest gross profit margin, pretty much almost tying the net profit margin with Costco, and then the second highest return on assets compared to Costco's around 9 to 10%. So in terms of profit margins, Kroger is not looking the best right now, but obviously this might change when Kroger and Albertsons merge together. That's definitely going to boost their profit margins. They aren't going to be competing against each other, having price wars, and so they might be able to do better in terms of competing with Costco at that point. Right here, PE ratio is around 14 times earnings, and in the most recent full year, that's 2021, they paid out a dividend per share of around 81 cents per share, which is a lot lower than Costco's $3, but a little bit higher than Albertsons, 44 cents. So in terms of a competitor analysis, it looks like Albertsons might be one of the best buys for profit margins and PE ratio. They are trading at the lowest PE ratio here. And then in terms of dividends, Costco is obviously beating out the rest of the pack by a long margin. So definitely interesting to see this competitor analysis. I think that a lot of this is going to change once the merger between Kroger and Albertsons goes through, and that might also affect the profit margins for Costco as well, because they're going to be having a lot of price wars with the new merged entity of Kroger and Albertsons. And then, of course, from an intrinsic value standpoint, they are trading below intrinsic value per share right now, so it'll be interesting to see where this stock goes from here. Let me know in the comment section down below what you guys think of Kroger and about the Kroger and Albertsons merger. Were you guys holding on to any shares of Albertsons in October 24th, 2022? Because if you are, you're going to be getting that dividend, so congrats to you. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.